Hi, this is David with the Enzo Trading System, and today I'm making this video from a different location. I'm actually in Europe for business and some pleasure, and it's been a while since I reported. I guess it was been a couple of weeks, and in the meantime, last video I made, things were going fairly. We had some decent unrealized profit, and then actually I was on a flight, and as soon as I landed, the unrealized profit vanished. So similar thing had happened. See if I can get these keys correctly. Yeah, similar thing happened just a couple of days ago when Bitcoin touched 69K, and then it dropped quite heavily. So a couple of things. First, yeah, any news is pretty much bad news as far as I'm concerned. Of course, it's better when the Bitcoin and crypto to follow they tend to go up, but when they touch all-time high, what tends to happen is that there is a lot of volatility, negative volatility to follow, as we've seen, and the algorithms usually they're a little bit lazier because that's what works best so that even if there is a dump, eventually the sale of the closing a position happens after the dump once it bounces back. But in these cases, the dump was so violent, it wicked quite below the all-time high, and this was true for Bitcoin and other coins as well. That basically we weren't be able to lock that profit. So yeah. I mean, honestly, it's not a big deal as far as I'm concerned. These are kind of freak cases. The good thing is that now that we have a new all-time high, then hopefully the market will continue to go up, and next time it reaches a 68K or even 69K, it's not going to trigger any major cascade effect, or at least not as heavy as it happened a couple of days ago. So in general, we'd rather have like a generic, I'm not going to say boring, but not as exciting market for trading. And that said, there's cases in which actually we were able to close a position with some profit, although the total wasn't that good. But the good cases were with Bitcoin Cash, where if you open a position low enough, then ideally this kind of dumping action is not going to affect so much, and then one eventually closes with some profit. So yeah, hopefully, since we are adding more and more markets, hopefully we'll end up with markets like Bitcoin Cash in this case that offer some diversification that compared to Bitcoin, and so even in these cases perhaps one is able to have a fairly stable profit curve even in these cases. It's never going to happen 100%, but one can strive for it. So that said, we're still in a drawdown as far as we're concerned, as far as our reference fund goes. Starting from end of May. It is similar to what happened in 2020. Personally, I mean, it's not a great excuse because ideally for 2021 we would have had a less of a drawdown, and it's not over yet, so who knows. Hopefully by the end of the year we'll get out of it, although we only have a month and a half. And so but still there's a lot of work that's been done, so we'll see in the next few months. Right now we have 19 active markets. We're seeing increased stability, and profit will come. First thing was get stability, and then once you have stability, profit should follow. And that's it. So next topic, I would like to explore a little bit about the buy and hold, because sometimes it comes back, and then it's not necessarily referred to our fund compared to buy and hold, but it is something that you hear a lot. People, they often say, oh, if only I bought at this price, like 3K or something, and then you can compare. There is also one tends to compare the buy and hold with the success or lack of success of a certain fund. First of all, you have to measure the profit of a fund not by its lowest point, but into the future when hopefully it's on a good point. And secondly, buy and hold. I mean, if it worked, people would do it, but some people do it. But when do you buy? First of all, it's like a lot of people actually they don't buy and hold. Otherwise, everybody would be rich on Bitcoin. So it's easy to say, oh, I should have bought at this price, but you didn't. So and honestly, I think that's the right thing to do. You don't, when the price is really low, it could continue to go lower, or could whatever market it is could crash for good. So first, if you want to do it, but just do it. And assuming the one would have invested would just buy in a certain asset, how much would you have bought of it? Probably not that much, because there is certain fear related to it. So you buy and hold Bitcoin at a certain price, and then 1 year later it's a lot higher, but how much you would have invested? $1,000, $100,000. If you invested $1,000, maybe you would end up being richer even if you did 10x. And also there's another thing to consider, because it's easy to say, oh, if only I bought at this price today, I would be this rich. But would you arrive at today's price, or would you have sold earlier? We all know about the story about the guy that bought Bitcoin, and eventually he felt he was so rich. He felt that he reached like the limit of what was possible with the market, and he bought a pizza with it. And then I'm sure there's countless stories like that. You buy a car at a certain price, and then maybe 1 year later it's 10x. So I don't think it's fair to claim that that you could have done something with the buy and hold strategy unless you did it, unless you sold at a certain price. And even if you sell a certain price and you feel rich now, what about in 5 years when maybe the price is a lot higher, or maybe not? So why even bother with the hedge fund or a managed fund in general? Recently I watched a video from this Wall Street millennial guy, and I think he makes good videos, but I definitely didn't agree with he basically reported that most hedge funds, they're not that much more profitable than maybe S&P 500 funds or something like that. The thing is, like, investing in a fund is also kind of a form of insurance. Of course, it depends on the level of risk that you take. If you take this similar level of risk of a index fund, then you should expect similar level of return and similar level of drawdown, but not as much drawdown, because all these funds, the stock market, they tend to go up, and it seems like it's a bit too easy until there's a black swan event. And honestly, it makes me think of a bit of a pyramid scheme, because everybody puts money into the stock market, or it could be any other market, and then it goes up and up and up, and then it dumps, and then that's the time when one doesn't feel so cocky anymore. So I think the managed fund, it's a bit of a generally it may give perhaps less return, but it's a form of insurance at the very least. But also, especially hedge funds or crypto funds, they can be highly profitable. It's just necessarily not going to happen in a few months. It may take 1 year. Generally, I always expect to have some return within 12 months. It's been happening for us, although we haven't been in the game for too long. But that's what I expect. I don't know how much, but I think, if you're playing with, if you manage to get into hedge fund, or if you're in the crypto fund, you earn it because you expect quite high return, and not return comparable to S&P 500. So that's about it for me. I could explain better as usual, but maybe I'll do another video. But if you have any questions, write in the comments, and also there's a Discord server where I usually hang out to, and I'm happy to answer. See you.